Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're back in Detroit in our offices, or in Dennis's case, in his home. It's good to be back. It was great to be in New York. It was great to see some people, but we're back in our regular spots, and we feel good about that. To this morning, wow, Target. What can you say about that one? They blew it away. So we'll talk about Target. We've got earnings as well from Urban Outfitters, Lowe's, a couple of Chinese stocks, but Target's going to be the big story of the morning. And a couple other headlines as well. Some big contrarian ratings today. Upgrades specifically. Canopy Growth and Intelsat, both catching upgrades. We'll talk about that as well. Our guest today, Andrew Chanin, he will join the show at 8:35. He has a new space ETF. He is the co-founder and CEO of ProcureAM. He's going to talk about his space ETF and his ticker UFO. And then at 9, we'll be joined by Sean Udall, and Joel and Sean will do the bonus hour as they've done for the first 2 Wednesdays of the month. Joel, let's throw it to you. What's going on here in the overnight session?
Well, I'm actually surprised the S&Ps are trading because I did not get a chance to do my levels last night and this morning, catching up here. But we are in the red by 9.5 handles here. We're trading at 31.09, pre-market high 16.75, pre-market low 0.50 here. A little bit of red here. I'm not going to get real concerned on the downside until we take out that 3100 level. Psychological level, also you had a low in there. I believe that was coming from last Friday. So we got a red candle. Nothing to worry about as of yet. Moving on to crude oil, rebounding from yesterday, slacking up 25 cents at 55.61. Gold in the red, just by a dime at 14.7220. Silver in the red as well by 5.3 cents at 17.065. Bitcoin just trending lower here, folks. That's all you can say. The futures are clean at 8,000. Down $45 at 8,065. So Triple D, it was a nice 2-week vacation with you.
It felt like 2 weeks, did it? Am I that hard to be with? Hard to hang around with? Did it feel like 2 weeks to you too as well, Spencer?
Spencer wasn't with you as much as I was.
Yeah, I was not with you as much as Joel.
I'm not annoying. Joel thought it was 2 weeks and not 2 days.
Well, no. Let's put it this way. You said as much as a normal person would say in 2 weeks.
Oh, just don't be quiet. You needed a muzzle. You needed a muzzle for me.
No, but shout out to everybody on the Benzinga crew, Nicole and Patrick, Jason, putting on just an absolutely incredible event in New York. Met a lot of our fans out there. The FinTech Awards went really well. Met some interesting people. But I'll tell you, looking at one screen, and my screen wasn't very good yesterday, and then coming, back and, looking at the home setup, boy, what a difference it is.
Oh, what a difference. What a difference.
Oh, wow.
You don't feel lost. I'm sitting there and I've just got actually Spencer's laptop, and I got a little iPad there, and I'm sitting here and trying to, get a feel for the market. I just feel like I'm in the dark. I come in here, I've got my screens, I got my filters running, which is my scanners. I've got all the stocks that are up, stocks that are down, stocks that are bid up, stocks that are bid down. I've got a whole deal. I come in, I sit here for 5 minutes. I kind of know what's going on. I sat there for 2 hours, and I was like, I still feel kind of in the dark. Got to have your setup. It's got to be your setup. So it's all about, building your setup and getting comfortable. But information is key.
Okay, so Spencer did it. Excellent job putting together a lot of the content for today's show. And how about Target? The strong gets stronger here.
Yeah, nothing bad in this report. The call just starting a few moments ago, but as far as the numbers, they were great. Q3 adjusted EPS $1.36. versus a $1.19 estimate. Sales 18.7 versus $18.49 billion. So beat on the top and the bottom line. In the third quarter, comps up 4.5%.
That sounds good too for Target. 4.5 comps? You think about how long Target's been out there, and they're getting 4.5 comps too?
Versus 3.6% estimates.
Holy
so
mackerel.
They blew away the comps number by a lot. The Q4 EPS guidance was a little bit light, but we don't care about that because they're raising their full year EPS guidance, raising it by about 30 cents from a low of 5.90 to a low of 6.25 for the year. And they said that digital channel sales growth, 31%, e-commerce growth, 31%, 80% of that growth was same day fulfillment services, right? So that's big. That's really big. So there, like I said, there's really nothing bad in this report. The only question, and I said this to Joel on the pre-market show, is will the stock suffer the same fate as Walmart? We saw them.
Because Walmart numbers were really good.
Yeah, I don't know if they were quite as good, but they were really good, and they gave it all back. So
I'm going to tell you something. People are expecting that. People are expecting that, oh, I can come in here. It's up $10. Walmart was good numbers too, and it's going to fade. That's why I think it is not going to happen. I actually think that Target could hold on to some of these gains. I don't know if it's going to keep running like we did on the last earnings report. And the last earnings report was the big gap and go. It was incredible. It went from $86 up to open up 99 and then just kept running all day, closed at 103 and then continued to run. I think you could see some of the same. I'm not chasing it up $10, but I'm not shorting it here either. The Walmart, I felt more comfortable, saying I think it could come in. I don't know in this case. This is a really good quarter. And I think there's some people who might be thinking that same thing. It's going to pull a Walmart. I don't think it's going to pull a Walmart. I don't think it's giving back the whole 10. Maybe it comes in a couple bucks. I think you're going to have people trying to buy the dip on the pullback here. Tell me about the pre-market action here, though, Mr. Elconin, and try to change my mind.
Oh, I can always try and change your mind. I don't know if do any good, but if you want a target on Target, how you like that?
Oh, my goodness. We're going to start with the puns. It's too early for puns.
123.69 is where they took it up to. 123.69 is your pre-market high, and you're just starting to pull back a little bit. Since you've hit 123.69, I'll call this support, but it's minor support. 119.30. We've hit that on 2 of the last 5 15-minute brackets. So there's your early range, 119.30 to 123.69.
I'm not seeing much in the buck. JV Spec, are you seeing much? Because I'm looking here and I see 7,100 shares up at 120.
No.
I don't see anything sizable. 115.90, 100 is nothing. I mean, it's traded 547,000 shares already. I don't see anything significant to think there's going to be book pressure that holds down this open on this one. So it's wide open. I mean, you're trading at all-time highs. The stock is wide open here. I'm not shorting it.
Quick question
here. Line. This is a no trade, no touch for me because up 10, I can't chase it. So what does Nick always say? Too hot to chase, too high? No, too high to chase, too hot to short.
Quick question here. I'm showing almost 900,000 showings. So you think my trade station volume is
that the after hours volume too?
Yeah, that must be. Yeah, because I got
pre-market volume I have right now at 549,000. I think my system tracks it pretty good. I've never seen an issue with it. So that's what I've got in the pre-market right now. So we have a discrepancy on the pre-market volume. I do have 549,000. I'm wondering if yours is just encompassing the after hours action as well. It was trading up after hours last night ahead of the number, and the people who were buying it last night were obviously correct.
You know what? That volume, unless those were some big crosses after the close, because I see a big block. I don't know, between 4 and 415.
I have 550,000, so I'm not sure. Maybe my system's wrong.
All right, it's still a lot of volume.
Because Saul say 900,000 on his screen too. Spinner's got 872,000, so maybe my system's missing. So I have to call my quote provider here. What's going on? I got a 553,000. So
all right, well,
that's what I have.
It's a lot. Volume. Don't look at that. Look at it up 955.
Anyways, yeah, it's it's a lot. It's now, and one thing, people, and I just want to say, when the company, so people are going to say, oh, Walmart should be way in sympathy. Well, Walmart already reported. And we've talked about the sympathy trades before. We talked about a lot of that in New York yesterday. But sympathy is interesting. When you have one company that's already reported, we already know the Walmart numbers. So there's no expectations that, oh, Walmart's going to be really good, let's buy it as well. We already got the Walmart numbers. They were good and they sold it off on it. So don't expect a huge move in Walmart. It might lift a little bit on the Target numbers, but don't expect Walmart to be up $3-4 on this in sympathy, because we saw yesterday with Kohl's reporting Macy's was down to over 10%, Kohl's down 17. You're not going to see that in this case because Walmart has already reported. So it's important to know those dynamics. Companies already reported. There's no expectations for how Walmart's going to do, so they're not going to come in here and buy it hand over fist thinking the numbers are going to be good, because we already know the numbers for Walmart, and it's already been priced in. So that's why if you're looking at Walmart, it's only up 11 cents.
It's up only 11 cents here, but how many times have you seen a good report get sold? It just kind of trickles back, fills the gap. And actually, I think it filled the gap that day. Found support. You had two lows at the 118.30 area. You had another low at 118.38.11. Here you are trading at 120. If you like the earnings, you feel like you missed out on it. You feel like the stock's going back to all-time high. You're picking it up at 120 and change. You let it go at 118. I mean, it's kind of, whoever wanted out. Yep. It's just a setup. I don't know whether or not it's going to work, but
I'm not taking it, but I can see what you're talking about there. You have a point to lean on. And like we say, you can put on any trade as long as you know where your out is. That's why, like on a stock like Intelstat, we were talking on the show there when it was at $14 last week or $15, whatever it was. We're like, you don't try to just be a hero here and call the bottom. Wait till it stops going down. At least give yourself a reference point. And then if it takes out that reference point, then you can get out. And I mean, the stock's at $6 now. It's getting an upgrade this morning, which is maybe this is a good segue over, because we've got RJ coming out with a bullish note on I, and they are calling a bottom. I mean, they are literally coming out here and upgrading the stock and trying to call the bottom, and the stock is trading higher. We'll go back to earnings season in a second, but let's talk I and this RJ note, Mr. Israel.
All right, upgrade to outperform. Price target raised to $12, or they announced the price target at $12 here. Some highlights from the note. They believe that the pullback.
I don't have my pump.
Oh, Joel got to get.
I have my old one.
Mute there. Okay. Muted Joel.
What is Joel yelling about?
I don't know. Something about Intelsat. They said a recent pullback was due to speculation and confirmation that we got from the FCC on Monday. They think that, if I can read it more closely here, the previous FCC-run spectrum auctions included government stakes of 20 to 40%, which the firm sees as more likely, given that more than half of the stake would result in litigation. So they do see the risk reward being more interesting down here. They're essentially just calling the bottom. I think it's more.
They're trying to call the bottom.
Call. Yeah.
I'm not being a hero. I'm not going to even try to call the bottom yet. Yes, it's bouncing nicely on the upgrade. Maybe, you look at the 555 level now, for whatever reason, get some selling off. You could try it, but $5, like Kenny was saying yesterday on the show. Kenny was great too, actually, when we were out there. We really enjoyed hanging out with Kenny. If you're listening, hi, Kenny. But you look at this, and $5 are always big numbers because, again, like we said yesterday, that's where securities become marginable or they lose their marginability here. And so 5 is critical for the stock to hold. And it held it yesterday. It's obviously up on the upgrade here today, but the story is still playing out here, and that chart is so ugly from the last week. I'm not going to be a hero trying to call a bottom on it yet.
I don't think you're going to see the 555. I think
it's up 8%.
It's up 8%.
Unless there's another analyst commentary or there's more headline news coming out of this stock, it's highly unlikely it's going to go red today with an upgrade. But you never know. There's a lot of overhead supply here.
Right. So I would use, if you're looking for an entry point, maybe look at that close, 609, bump it up a little bit, 620, just some people that maybe wanted to cut. I don't know what the short interest in. I don't know how many people are short or how many people will wait and nibble at 5 here, but you have a different market dynamic. You're going to have to be buying into an up market as opposed to your bids just getting smacked. So, 609, that was the close from yesterday, 555 low. Those are really the only numbers, but what I think is interesting about this, the trading action so far, is you haven't even taken out yesterday's high. 690 was yesterday's high.
Important.
Yeah, close to yesterday.
It's also at the dreaded 666 offer right now.
Oh, boy, that is bad.
We were going to write a page in our book on the 666 trade, the devil trade, we were going to call it, because that was the bottom at GE. That was the bottom of the S&P 500 there. Remember the S&P 500 back in the financial crisis bottomed at 666. So when stocks go down to 666, that's the devil trade. Now this has come back up to 666. Is the devil going to hold?
Your book is turning into a novel.
I know, it's getting long. I thought it was going to be like 6 pages. It's like 8 pages now.
Yeah, it's getting long here. But yeah, you open up 690 really opens up here, get over 7. But here we are trading at 666, up 57 cents. I could always try and figure a nice retracement here, but we're far from talking about that here. But we like these. We did a lot of talking in New York about analyst ratings, whether you're going with the herd or you're making a contrarian call. This is the definition of a contrarian call.
Oh, yeah, it is. And we have 2 contrarian calls here this morning, Joel. We got a big one, and this one is very interesting. Canopy Growth getting upgraded. BAC, Spencer Israel, what's up?
Upgrade
CGC.
Upgrade to buy, no less. I have to go into my.
Whoa, that is a contrarian call because this stock has been straight down. Feels like forever. We've been talking about the show. It's 50. I'm just going to go to that. $52 back in May. So we go 6 months later. It's been cut down by about 65%. Trade down to 15 is up $1 here this morning almost on this upgrade, up 78 or 0.78 cents. What was said in the note? You got any note? You got any?
I don't got anything in the note in front of me. No highlights for you. But first upgrade we've seen for this one in a while, and it's not a super highly covered stock.
They're saying the worst. I'm just quickly trying to grab the note here. So they're saying the worst appears to be over. They expect the company can potentially exceed expectation. Okay. So the analyst comments, now with shares down 38% versus the S&P being up this year since our downgrade. The bad news is out. The valuation is more reasonable, and importantly, street estimates are achievable or even beatable for maybe the first time in Canopy's history as a public company. Channel inventory is getting leaner and data to look better ahead of retail dollar volume. A bear case based on multiple compression and to a certain extent cash burn, despite still years of cash, seems less robust now. So jump in. That's a lot of bullish stuff. They're just saying the worst is over is what they're trying to say for CGC. I don't know if that's the case. All I can tell you is that this trend is still not your friend, and there's going to be a lot of people wanting to sell as the stock comes back up because everybody is burned on this. And like Spinner was saying, we are going to be entering tax loss season 2, and that is not good for the pot stocks either. I believe rallies are to be sold on all pot stocks. I think the worst is not over, so I'm disagreeing on the overall sector. I don't know about specifically CGC, but I think if you're buying pot stocks here, it could be a rally for a day or two. I mean, this could kickstart the sector. I don't think I'm chasing CGC up 5%, but if CGC really goes crazy and gets up to like 17, 18, squeeze them a little bit there, if I was long, I'd be lighting up.
Just one comment on your book from Ivan. He wants to know, or he says if it's longer than 10 pages, then make it a video because he has a Gen Z attention span.
Okay. I will say the other pot stocks are going to lift with this. Okay. So it's not just going to be CGC. It's going to be all the pot stocks are likely to lift with this. So if you're trading pot, it's going to have probably a pretty good morning. If for whatever reason they turn around and start giving it back here, that is horrible. So hopefully for all you pot bulls out there, hopefully this can be the start of maybe a little relief rally, a dead cat bounce, whatever you want to call it. I don't think this is the start of a new bull market. I think this could be a relief rally because these things are so oversold. So could we squeeze Kronos back up to 8? Potentially. I don't know if I'm trading it though, just because there's so much overhead supply and the trade's been so bad. Could they squeeze, an Aurora Cannabis maybe back up to like 260 or 270? Maybe. I mean, it was there 2 days ago. So you're coming here shorting and right away into this bounce. It's hard to do because they're so oversold. So when you see an analyst bullish call like this, it gets everybody a little bit excited more about the sector. So you could see a day or two maybe of relief pop. I think it fizzles out eventually, though. And trades, not investments here, in my opinion.
Okay, so the only people here that are profitable are the people that really have bought it over the last 4 days. You went down, made a low at 1381. So what you have is all these people that had waited all this time and started bottom fishing over the last 3 days, 4 days. All those people right now are offering it at like 16.32. We've hit in the
Trying to get the money
last,
back.
yeah, or taking profits. I mean, there are some people in profits here,
For
right?
sure.
Over the
Day
last 4
traders.
days. Yep.
The day traders, like people
Right.
who had it overnight. I mean, it was a nice candle yesterday, so it's a good time to upgrade it too. You had a little bit of a reversal there. You did. You had full reversal there. Where stock made a new low and then a new high on the day. So that was bullish in itself. So there'd be some technical traders that would have bought CGC yesterday just from a technician's perspective, wasn't there, Joel?
Yeah. Oh, yeah. To go down and make a new low and then
And then
come
make a new
back.
high. That was a
Yeah.
reversal day.
Yep. So what I'm looking at here, if you can clear this 1632, which is the pre-market high, I get excited, but I want to get real excited. I want to see what happens at 1662. And you mentioned that level, Dennis. That's your 4-day high. Your next daily high is almost $3 higher than that. So if they can push this thing through 1662, get it up into the 17 handle. Once again, people that wanted to buy it yesterday and didn't will have to buy it into a lifting market. And also people that, I'm covering this thing at $10. They're either going to have to wait a couple days or buy into a rising market. So 1662, that's a good level to clear here. In Canopy Growth, Spoos getting off the mat. We missed another buy the dip opportunity.
Yeah, if it pulls by 10 points, you seem to have to buy.
Yep.
Those are the dips now. If we get market down 0.35%. Oh, that's a bit. We got to buy the dip. They can't even let it fall down 1 or 2% from the highs anymore. It only falls down fractions of a percent from the high before the buy the dippers come in. So I don't know. This market, just buy the dip.
Do you want a tough question from Juan Pablo Posada?
Yes.
Can you teach us the most common technical indicators used by institutions, hedge funds, and large investors?
Most common?
Yeah.
Trends. For real. It is. It's trends. I mean, I think that's, you can use indicators and everything all you want, but everybody's following the trend. So stocks are trending up, they're buying pullback, stocks are trending down, they're selling rallies. I mean, this is why this comes to fruition. This is a trendy, the market has been trend following for years. They want the trends to be up. They want, and that's what they want, the stocks to be stronger. Those are the ones they're buying, and the stocks are weaker, they're selling. So I'm just going to say it again. It's all about trends.
And I would say,
from a technical perspective.
Yeah, from a technical perspective, I would say put fundamental in there instead of technical, because I think the fundamentals ultimately rule a lot of their decisions.
Oh, I'm more of a fundamental trader than a technical trader. We know that if you're listening to the show.
Yep.
But I respect the trend.
Yep, because if you identify something that you want fundamentally, then you go to the technicals. If you're just trying to look at the technicals, no matter how good your indicators or your technical analysis is, if the fundamentals are not there and the company's losing money, then good chance the stock's not going to go anywhere. But
in the long run, fundamentals are what makes the price, really, in the long run. The short run, you have technicals, you always have a lot of other factors. You can have your market structure factors, there's locates and different stuff. But for the most part, in the long run, it's fundamentals that will drive price. I mean, Dennis, it's just like Target. It's the same story. Target blows away, raises guidance, stock's probably going higher.
All right. So guess what book Robin Steckel is recommending we read? You only get one guess. Don't look at you.
Oh, the one that's been out, the Renaissance.
Simon's book.
Yeah.
We've had she's the fifth person in the last week, so I better read this book. It must be pretty good. So obviously, that hedge fund has outperformed the market for 40 years? Is that what it is?
Yep.
Give background in that book, Spencer. You know it. Give the background of this book, just for other listeners, because I don't know if we've talked about it on the show.
Yeah, it's I think it might be the first book, the first or maybe the
What's
only.
the name of the book? You got the name of the book in front of you?
Yeah, I had it yesterday.
The Man Who Solved the Markets.
The Man Who Solved the Markets, written by a longtime reporter here, and he got some pretty good access. Not with the company itself, but with former employees and sort of how they essentially beat the market, how they constructed their systems to do so.
Employees of who?
Of Renaissance. He talked to
Okay.
Yeah. And I mean, he got better access than I think almost anyone who has.
It's like a little inside scoop in the Renaissance.
Yeah, the author's name is Gregory Zuckerman. He's a long time long time writer, and so I haven't bought it yet full disclosure, I've just listened to interviews he's given, but I'm going
Yeah.
to buy it. I'm going to read it because
I think I'm going to read it too. I don't hardly read any trading books anymore. I often find I just don't gain that much from it. But this one sounds like a pretty good one. And I'm curious, if they give me a few secrets from Renaissance, sure, I'll check it out.
all right.
Yeah, so
wait.
that's a book that everybody has recommended to us. When we were out in New York, it was like at least 4 people recommended that book. So
Let's go back to
it got to be a good one.
Well, let's go back to earnings. We missed lows. We talked Target. We missed lows.
Yeah.
Let's go back to lows.
What did we say on the show? What did we say on the show yesterday?
We said the bar was set low. No pun.
The bar was set very low for lows. Remember, we kept saying low, and if we say low one more time, the puns were just out of hand on lows. But we said the bar was set very low, no pun intended, meaning that because Home Depot had obviously missed and disappointed, if Lowe's said anything okay, the stock was likely to rally. Well, they did not only say anything okay, they actually beat, and as sales were up. So they kind of showed Home Depot how to do it. Now, this quarter was good, but other things being equal, without the Home Depot report, I do not believe it would have been up 5 points here this morning. So I think the bar was set so low that they were expecting Lowe's to lower guidance and potentially miss. And they actually give us a number, Spencer, and then I'll go to the details.
All right. Q3 adjusted EPS $1.41 versus $1.35. Sales of 17.39 versus 17.68 billion. So a slight sales miss to go with the EPS beat, and the full year adjusted EPS guidance they gave is in line. So
in line,
essentially
good enough.
Report, right?
Yeah, this report, if Lowe's would have reported first and not Home Depot, I think Lowe's could even be down on this report. That's how much the Home Depot reported mattered. But expectations were so low for Lowe's yesterday. I mean, Lowe's traded down 2 points off the Home Depot report. So everybody expecting the worst, expecting that while Home Depot lowered. So in all likelihood, Lowe's had a bad quarter too. Well, Lowe's came in line. That was good enough. And they didn't lower guidance. That was good enough too. And that's why the stock is up $5. It's not that this report was awesome. It's the fact that it wasn't as bad as Home Depot. And that matters. So it's always good if the company, if you're reporting second, you always want the company that is reporting first to miss, because then the bar is set lower for you. If the company blows it away that's reporting first, then the bar is set high, and then there's a higher likelihood that you're going to have to blow it away too to go higher. So it's all about sentiment coming in. Expectations were set much lower because of Home Depot, and that is why Lowe's is up 5 points here this morning on this okay report.
If you're looking for a candidate to give back the gains, and you had to pick between, or if I had to pick between Lowe's and Target, I think, and for other reasons besides what you just said, Dennis, I'd say Lowe's.
Yeah,
because you hit the pre-market high at 120.67. That far exceeds the former all-time high, and I know Target's a different
situation. What was the pre-market high?
Former all-time high was 118.23.
I've got that. What was the pre-market high?
Pre-market high was 120.67.
Okay. 120 is going to be big.
Yeah, there you go. Because you've already peeled back. You did the next couple brackets. You hit 120.50, and then you came in and it was 119.77. So I bet you those offers you're stacking up here at 120. That could be, where the designated market maker is going to have to fill all those sell orders. And then if you're looking for the gap fill support, I don't know if you'll see the top of yesterday's range, 115.12. But this one, just keep an eye on it. Be more likely seller to see what they can do at 120. They don't get to 120. Maybe look for a little bit of a decline.
Yeah, I mean, that's a good point you're making there. The only problem I have overall with people coming here and shorting the lows is that it's at all-time highs. Yep. I don't like shorting stocks making new all-time highs ever, because it's all air above, and you've got some people that were maybe playing it the other way saying, well, Home Depot missed, the Lowe's is bound to miss too, so I'm going to short it. And those people are all caught. And those people are like, well, this quarter wasn't that great. Why is it up $5? Well, you weren't listening to the pre-market prep show yesterday. It's all about expectations.
A lot of times they go in separate directions. A lot of times
they do a lot of times, because it's all about those expectations. Set the bar lower, we could beat that. So, and they did. And that's all there is to it. If they were reported, like I said, if it was reversed and Lowe's would have reported first, I do not believe Lowe's would have been up $5 in this report. The Home Depot report really mattered to Lowe's.
Okay, 8:30 as we climb our way back in the futures here, down only 7 handles here.
Another retail stock wreck too here. These apparel retailers are just a mess.
Urban.
And we didn't talk about it a few days ago, but Abercrombie got hammered. They all got hammered.
This is one that the the bar gets set lower, and they find a way to actually go under the bar. Go ahead.
Right. So Urban Outfitters reporting yesterday after the close, Q3 EPS 56 cents. They only missed it by a penny. Sales 987 versus a 1 million versus a $1 billion estimate. So they missed both the numbers. Comps up 3%. I guess that's okay, although I don't know what the estimate was. I don't have it in front of me here. Regardless, sales and earnings miss in the quarter, not what you want to see.
I don't know. After that Kohl's debacle yesterday, I just kept going down and down and down, and Macy's kept going down and down and down. Nordstrom tried to hold on. It held on okay there. When's Nordstrom report? Is that tonight?
I think it might be tonight or tomorrow.
It's coming.
Refresh. Yeah.
Macy's is coming too.
Nordstrom is tomorrow.
All right, Nordstrom. The bar is set lower for Nordstrom's and Macy's.
Macy's.
I never like to bet on Macy's low because Macy's has a way of going under that low bar, but JWN is interesting. JWN, if they say anything okay, the stock could actually be, this stock's a little more loved for whatever reason right now. It held on pretty good yesterday. Like, consider the coal sell-off, and I know we'll come back to Urban in a second, but consider how bad the coal sell-off was. Macy's totally participated in that. It could not catch any, support really whatsoever. It was down almost 10% by the end of the day. The Nordstrom was only down 3-4%. It was holding on pretty well. So if Nordstrom can come out and say okay earnings, the stock could rally. So I don't want to bet against Nordstrom here, or at least on this report. Going back to the Urban Outfitters, these stores, it's like the Gap. I mean, they're just a mess. It wasn't that bad of a quarter, but it doesn't matter. They just don't want to own these stocks. And they had a nice relief rally, the laggard rally from September and October. But if you go a little bit farther out on your weeklies and you look at what it's done for the last 2 years, the stock is basically straight down. It means a lot of overhead supply. A lot of people are caught. And the story now for the retail stocks, where it got hot for a little bit, has cooled off significantly. And URBN down 14%. I do not expect this to rally us back today.
Did they give pizza sales?
Is this the one that's selling pizza now?
It's not like every quarter.
Were you right? Do they really sell pizza at Urban Outfitters?
Yeah, remember they bought that pizza place a few years ago? They bought the Philadelphia-based pizza restaurant.
Buy yourself a nice little teeny bopper shirt and a slice of pizza.
Yeah,
the business model. We'll feed you and we'll clothe you. We do all all your
Pizzeria Vitri. Okay. No, they did not give pizza sales, Joel.
Okay, I do see a potential area of support here.
Ooh.
And yeah, I do. Look at go to your dailies here. September 18th, all the way through September 25th of this year. 1, 2, 3, 4, 5, 6 lows in the same area. Call it $24. You got it there in the after hours. You got it down to $23.90. So
that coincides nicely. We talked about this when we were in New York yesterday too. When those pre-market lows coincide with those lows from before, that's not bad. So you have a setup to call the bottom in Urban. Are you doing it?
I don't think it's going to get there.
Oh, you don't think it's going to get down $4.50? Can it down another 50 cents? I think you could test it.
It's just like one of those.
Does it hold?
It's just one of those sleep. I
don't like any of these stocks, so I'm probably not playing it. But I can see your setup. Maybe you get a little bounce trade, $23.90. Maybe. I get on board with that. You could probably talk me into it.
Okay. All right.
Don't talk me into it. I don't like buying these retail stocks.
When you see that many daily lows in one area, and then you see a bump up to $31, and then it comes back down to that area. I don't know. It's just just historical, significance of it. It could go to $21 today, but I'm just saying there's support. There were buyers 5 days in a row. There was buyers in the pre-market, and now you're starting to lift. So they're like, oh, I missed 24. Now I'm going to go 24.10 bid. Oh, I'm not getting that. Now I got to go 24.20 bid. So we'll see what
this
happens.
is only trade 117,000. Am I right? What's the volume on your Urban? Let's see what my volume is doing.
Yeah, 117.
I wonder why Target was different. 117. I have the exact same thing too. I wonder why I had different numbers in Target. What's your target now? I'm 823.
1165.
I must have missed something. My quote provider must have missed a big trade or something. That's so weird.
I don't know.
I've never seen that before.
Yeah,
I'm gonna yell at them.
Okay.
Anyways, I'm not going to throw them under the bus and tell you who they are, but I'm going to yell at them.
Target
coming.
continues the rally here. We are at 122.30 now, up
That's what you're saying.
11.50.
I would not be fading this.
Not yet.
120. It was 120 and a half. And I would not be fading this target one. I think you got some people. It's breaking out new highs. Really good quarter. I don't think it pulls a Walmart. I'm going to say it again. I do not think this gives us back.
All right, 8:35. Let's bring on today's guest. Longtime friend of the show, has been on, but he's on for something new today. Andrew Chanin. He's the co-founder and CEO of ProcureAM, and he's got a new ETF with maybe the best symbol on Wall Street. Andrew, good morning. Can you hear me?
Good morning. I can. Can you hear me?
I can, and I can see you. So, Andrew, you've got the Procure Space ETF, ticker UFO. Congratulations. Well done on the ticker.
Yeah, stop. How do you get a ticker UFO? How is that not taken by someone? That's a fantastic ticker.
Much appreciated. I was thrilled when I came up with it, but even more thrilled when I realized it was not currently taken or reserved, which it's not easy these days.
No,
it's really out of this world.
Thank you.
I'm regretting, that I never took DDD because my initials, I'm Dennis Dale Dick, I'm Triple D, everybody calls me. I'm regretting, and it's 3D Systems now, but it was available for a while. I should have got that if I was ever going to go public myself, just launch myself public. I was going to go under the symbols DDD. So congratulations on getting that UFO. You got to be fast.
I appreciate it. Let me know when your IPO is.
I don't know what I'm IPOing, but I like the symbols. Well, tell us about your fund.
So we launched UFO in April. It was a concept I had been working on for a while, but we were thrilled to actually find a group that had been working on building out a space index for actually several years. And so it's a coordinated effort between a known index provider, S Network Global Indices, and a newcomer that has a significant background in the space industry, a company called Space Investment Services, led by Micah Walter Range, a former director of the Space Foundation. And so he has a background in space technology and space policy and really understands the industry, the players. And so, when we were kicking the tires on the various indexes out there, we found this one and fell in love with it. So, what they do is they break down both pure play, which, I think when someone's looking at investing in a thematic fund, one that's following a specific industry, I think that pure play exposure is something that's typically very important for them, as opposed to something that has, just completely diversified companies that aren't really moving the company's bottom line from that specific theme, but maybe from other businesses. But that said, 20% or less of the fund does have some of these more diversified, think aerospace and defense names. So like your Lockheeds and your Airbuses and Boeings and whatnot that are major players in space, but it's not a majority of their revenues. But the types of companies that this index is looking at are companies that specialize in ground equipment manufacturing that are dependent upon satellite systems, rocket and satellite manufacturing and operations, satellite-based telecommunications, think radio and television broadcasting, certain things like a satellite imagery that's typically used for intelligence services, and actually more and more now being used by even hedge funds to get new data that other people aren't necessarily looking at to make more educated or different decisions using different data that others aren't using, and then other types of space technology and hardware.
That actually brings me to my my next question, which was, if you look at the holdings, you get the obvious names, you get Lockheed, Boeing, as you mentioned. But if you can break it down by sector for us, what is the sector breakdown here? You've got some communication, you've got some defense companies, but what is the sector breakdown here?
Yeah, so it's heavily, you'll see a lot of the communication services. So the companies that you might be familiar with, are something like an AT&T or something like that, which again is a diversified name. So it has a lower max cap on its weighting and falls into this group of diversifieds under 20%. But you'll actually see a lot of these satellite companies. So companies that own significant satellite networks or even constellations that are acting as satellite operators, which you do get satellite manufacturing in the fund, but satellite companies are something that most people don't really have that much exposure to for the most part. And if you're looking at other ETFs, even aerospace and defense, or broader technology or communications, you're not really getting that much exposure to satellites. So one of the neat things I think when you look at this fund is, okay, it doesn't just have my personal favorite ticker, or other things going on, that make it like a gimmick. It actually has these companies that are reliant upon space-based systems and services, and satellites are something that are very underfound in many people's portfolios. So I think one of the reasons that those types of companies are overlooked is because people don't really understand them. But if you look at some of these other transformational technologies and trends that other people are getting excited about and launching funds about, and investing significant capital, and you're talking things like 5G, Internet of Things and connected devices, blockchain, even. So some of these data intensive industries, many of them are actually reliant upon satellite-based systems in order for that data that's being generated to get from point A to point B. And so it's kind of an underlooked area, but a lot of this fund right now, what you're getting, because this is what a large portion of the current publicly traded space industry is comprised of at the moment, is these satellite companies.
Yep, and I
But
see. Yeah,
you're also getting industrials and information technology and some consumer discretionary, as well as very little materials. Now, could that change in the future? Certainly, the index isn't just set it and forget it. It is a rules-based index, and it can look at other types of industries that we might emerge into, like space tourism and transportation and hospitality, which things like Virgin Galactic and whatnot make those types of areas possible. But also the militarization and defense of space, right. Space resource exploration extraction. So it is a living, breathing index that is looking at all these areas that might become future publicly traded space companies.
Right, and you look at the holdings, you see names like Dish and Comcast and AT&T as well, and Garmin. How actively managed is the fund? Because I look and I see ticker I, and we've been following this one here. It went from 22 to 5 in a week. It's up to 6 now, but you get a big loser like that over the course of a week. How actively managed is UFO?
UFO is a passively managed fund. It tracks the S Network Space Index, which is a global index and comprised of companies from around the world. I'm glad that you actually brought up Intelsat. Space, just like many other industries, can be a volatile one, and trying to play an industry by picking an individual name could be a very, very risky proposition, putting all of your eggs in one basket. And, that's actually one of the reasons why looking at a long-term technology heavy driven industry, to me, it made sense to actually provide for investors something that was giving them instant diversification, not just to US companies, but to global companies. So although Intelsat is actually listed on a US exchange, it's actually a Luxembourg-based company. And what's really interesting about what's going on with that company is currently in the US, we're looking at doing a 5G spectrum auction. And because Intelsat, as well as some other satellite companies, happen to be actually internationally domiciled, US regulators are actually looking at that as something that they might not want to allow a foreign country's technology companies to actually be a player in something that is that the US is going to be relying upon in the future. So when that news came out, we did see that Intelsat took a big hit, that they might not be allowed to enter this auction. But you have to look at this from a global perspective. If the US is doing certain things from a trade war perspective or others, you have to wonder what happens when other countries or regions have their own auctions or things like that for 5G. Will US companies see that same isolation and be blocked out? And if that's the case, it might be a loss currently in the US for a company like Intelsat, but in the future, it might be actually a benefit in Europe or Asia or something like that for other companies. So it really is important for such a globally collaborative industry to have, in my mind, a global representation.
So Andrew, you're known prior to this for the ticker hack, the ETF hack, and that was a good idea, and you were ahead of that theme. But your timing was also great, because if I recall, just after you launched hack was the Sony hack, if I remember correctly. And that was the big catalyst for your fund. What is the big catalyst here for space? Is there one?
I actually think that there could potentially be several catalysts, and why space is actually a really important industry to be looking at today. One of those things that I think is a trend coming up is the militarization and defense of space. So we look at things like the creation of the Space Command and Space Force. That's not just happening in the U.S. They're also looking at doing that in France, China, India, Russia. And if you look at any other area where the U.S. has been a leader militarily speaking, which has been every single one of those areas of land, air, sea, and even cyberspace. Space is another one of these domains that the U.S. wants to be a leader. So to that extent, if other countries are continuing to spend massive amounts on positioning themselves to be leaders in outer space, it would be shocking to see the U.S. say, okay, you know what, we will allow that to happen. So I think the militarization and defensive space is one of those areas. But like we mentioned before, you think of things like 5G, Internet of Things, big data, blockchain, things that are completely data intensive, very important for making various technologies that we are building off of work. Satellites are the digital toll operator for this digital superhighway in many cases. Yes, maybe 5G in certain limited cases can work in a very small network, but when you're looking at taking data globally, satellites are absolutely essential for much of these various technologies to work. And all of these technologies, if people are saying those are going to be game-changing technologies, well, they're saying that an immense more amount of data is going to be created, and that data will need to go from point A to point B. So that is another potential area. If those areas start to take off, satellites might become a much bigger player as well from that. But also, you look at various investment banks and research houses like Morgan Stanley, and they're predicting that the space industry by 2040 will increase to over $1 trillion industry. And even other outlets, Bank of America believes that the space industry will be roughly a $2.7 trillion industry by 2045. And what those two groups agree on is that broadband internet will be one of the largest drivers of that. So, doing stuff like we're doing today and live streaming this video, satellites may be playing a major role in how this video is actually going out from us together, as well as to the thousands and millions of viewers around the world. So, the way that we're using our phones and relying upon it, 5G is one of those things that, satellites are helping enable that technology. So I think there could be many different things that allow it. But, if you also look at some other technological cross sections that are making space more accessible, you have things like reusable rockets. If you don't have to just destroy a rocket every single time you launch it, and you can actually reuse it, you're going to save a ton of money. All you need to do is just put new fuel in there and do a new kind of test. So that's one thing, as well as satellite technology. Satellites are getting smaller, sensors are getting stronger, satellites are lighter, and you're able to do even more than you were from a satellite 10 years ago. And if that continues to change, it's going to allow what more companies can actually do in outer space. So being able to kind of lower those barriers to entries for new competitors to come will create new technologies. And a lot of it will be reliant upon the infrastructure that's being built today.
So you can correct me if I'm wrong here, but I feel like space is a relatively new investment theme, and certainly not as well known as cybersecurity. So what has been the reaction, across the street as you've sort of gone out and launched this fund?
Yeah, I think we've seen a lot of interest from all different areas. I think retail investors, even people from home calling and calling our 800 number and reaching out because they want to buy stock for their kids that are fascinated in outer space, and they want them to be able to have something that they're already excited by. So many people are excited by space, but they don't know what it means, or they have completely wide-ranging definitions for what it is. And that's why we were thrilled to be able to work with an individual and a company with so much experience in the space industry. I think what we've seen with the Robo Fund from Robo Global, and having a deep bench of individuals that understand the robotics industry, I think was something that was kind of helpful for them to get the message out. For us being able to work with various people from across the space industry to help others understand not just, hey, UFO exists, it's a fund. If you want to get broad-based global diversification and exposure to space companies, here's a way that you can get exposure. But also, really, this is an extremely important industry for not just America, but for global aspirations. And the more you hear about climate change and environmental damage and turf wars and on Earth, there is tremendous collaboration going on from countries and companies from around the world trying to advance various human missions to increase what we can do in outer space. And a lot of them are using publicly traded companies. And if you look back to where we were years ago, it was almost completely a government funded kind of, okay, this is a national pride thing. But now governments are saying, you know what, we realize that we don't, not only can we not do everything in-house, but we don't even want to do everything in-house. If we could find a company that's going to be able to help us complete our mission, we're happy to license or purchase that technology for you. And that's really that, and advancement of space policy is really kind of taking that next level for outer space. And I think that people are starting to wake up. Clearly Morgan Stanley and Bank of America and other groups building out space research groups is a first sign that this is a serious industry, and one that will hopefully be here for a long time. And we'll be talking about completely different things the next time we do one of these pre-market preps when looking at the space industry.
Two issues before we let you go. Getting a question I see that's in your index, MAXR, if you want to make any comments on that. And then I just did a quick look, and I don't see Tesla in there.
Well, Elon Musk is certainly known for his ambitions for outer space. However, much of that exposure is actually via his private company, which is actually SpaceX. Okay. So Tesla would be far from a pure play company, and even as a diversified company would have very little revenue growth from space. So that's a reason that it's not included in the index. Maxar is a very interesting company with that's constantly changing, and they've actually helped Canada, government agencies and others actually build and operate several satellite networks around the world. So Maxar is a really interesting player, one that has seen a lot of volatility, a lot of changeover, and additions and spinoffs and acquisitions and whatnot for that company. It's one that I think is has seen a lot of volatility, but is starting to figure out its place in the world. But it has done a lot of things within the U.S. and Canada as well.
All right, Andrew Chanin is the co-founder and CEO of ProcureAM and the new Procure Space ETF, ticker UFO. Andrew might be the best ETF namer on the street. Andrew, thank you so much for joining us today, and good luck with the new fund.
Thanks for having me.
All right, 852, guys. How are we doing out there?
Well, we tried to clear yesterday's low at 1275 here in the futures. We tried that on several times here, tried to get above there, hit it right on the kisser quite a few times. So there's our early morning resistance. Let's call it 3113 for simplicity's sake. And then we've just kind of trickled back. Still looking at that pre-market low is minor support at 0450. On your dailies, I was wrong. You got nothing at 3100. If you're looking for support in the S&P daily chart, basis not the intraday trading, but the regular session, 95.75. That was your low on Friday. That's back under 3100. Intraday low on that day was 03.25. That coincides nicely with your pre-market low at 0450.
Salesforce came out with some guidance.
Yeah, I was about to go there.
We haven't talked it yet. Stock's really doing nothing because I don't know why they came out with this guidance, because it's really a nothing burger either.
I'll tell you why. Because the Salesforce Dreamforce event is going on. That's like their annual conference, and they have some investor presentations type at the beginning there. So that's why they had the guidance this morning. I don't know what the algos were reading, because it dropped on that and it's gotten it all back this morning. So they raised.
There's really nothing there.
So the headline is just that they raised their 2020 sales guidance here.
But it's so slight. Give us those numbers.
It's a slight raise, and they also gave some 2021 sales guidance, and that is in line with what analysts were expecting. So there's very slight sales raise for this year. I'm sorry, for next year, and some updated guidance for the year after that. So.
There's nothing really to get that excited about here. So, I mean, it sold off a little bit. It's come back. I don't know how they're interpreting. The numbers are so close to being in line on both sales guidance and the for the 20 and for the 21 that it's hard to get excited about this at all.
Just quick answer a quick question here for Paul W. What do we mean when we use the term comps? It's most often used in retail stocks, and it's just talking about how it comparables is really the full word, and it refers to the company's same-store sales compared to the previous year or quarter at a similar store or stores put together. So comps is just short for comparables.
Right. So it is any location that's been open for at least 12 months, they took the sales from last quarter and they compared it to the sales in the same quarter a year ago.
They're knocking out the new stores.
Right. Forget new stores. Comps does not account for new stores. It only accounts for stores that were open at the same time last year. And how did they do on a year-over-year basis? I
mean, you obviously have growth from two areas. When you're talking like a Shake Shack and you're talking different, you have growth from opening new stores. So sales are going to go up because you're opening new stores. But how are those existing stores doing?
Exactly.
Investors are very concerned. So you could open up new stores and be growing the sales number just by opening new stores. But that doesn't mean that the sales in the existing stores are growing. So it's very important, especially with new launches, on how those existing stores are doing. And that's where you look at the comps numbers.
Exactly. So let's pull up actually, CRM is kind of a nothing burger here. I don't know.
Yeah, I pulled it up.
It's come back a long ways. Spender making a good point. It's come back a long ways in the last 3 weeks. right back up here at the highs again. I do believe the cloud story is going to get hot again here. It cooled off significantly. We can see a lot. Now, CRM has always been, it seems like, a lot of these companies even came from, executives of CRM. But a lot of them are starting to climb back. We see Twilio. We talked about the 90. Continues to climb. It's through 100. It's showing some life here now. I bought Workday in my long-term portfolio simply because I believe eventually they're going to come back. Also, Sean Udall, who's going to be on here in 3 minutes, actually talked me into it because he was on the segment 2 weeks ago saying if you got a long-term time horizon, really long, he was saying something like a Workday you can't really go wrong with. And I was like, well, I have a retirement account. I like Sean Udall. He makes pretty good calls. And I also believe that the story will get hot again. So even though the valuation is nosebleed on WDAY, I stuck a little bit in the long-term portfolio. And we're going to have Sean on in 3 minutes. So, maybe he can elaborate a little bit on some of these stocks. But the cloud stocks are starting to come back a bit.
What's going on in AT&T?
With why it's down here again? That's
a
good question. What is going on with AT&T? It's got to be a headline here. We missed something.
I don't know. I mean,
we want to find out right now.
I didn't even see anything this morning.
I didn't notice it either.
I didn't even look.
I don't know.
Let's go find out because AT&T is down another 83 cents here. Obviously, somebody said something somewhere, so I'm going hunting here as well.
MoffettNathanson, man.
That was yesterday.
That was yesterday.
I know, but
they kickstarted this, so there's something else happening here in AT&T. Chad, help us out here. We're on the show live. Yell at the news desk.
Yeah,
on AT&T, we need to find out because that's news. It's not going to be down.
That's a big move.
Nothing.
That's a big
move. Not going to
be
down 80 cents on nothing. I'm digging myself here as well. Same time.
Yeah, it's down. It's down below yesterday's low.
I mean, you know what?
What?
There's 606,000 to sell as an imbalance. Could that be knocking it down 80 cents though? Is there anything else out there? That's a huge imbalance for AT&T. I haven't seen one that big for a sell imbalance in a while. So that would knock it down some. I just can't believe they're knocking it down 2% because of that. But that's a big sell imbalance. So there you go. So there is at least a catalyst from order flow perspective. I got to think somebody else has said something, though, because it's such a big move. I would not think the Arbs would knock it down that far.
Hey, what was the number on that?
Imbalance.
What was the number?
605,000 to sell on AT&T. That's significant. But it's already traded 229,000 shares this morning. But that's a big sell imbalance. I would think that would knock it down 20, 30 cents. I wouldn't think it would knock it down 83 cents.
All right.
That's a big sell imbalance, though.
I can't confirm or deny this, but Alan Lane says KeyBank data shows deterioration in AT&T TV Now subscribers. KeyBank analyst Brandon Nispel. That's
weakness in AT&T
Now subscribers.
I don't know anything about that either. All I can tell you is I just went through and checked through some news sources. I'm looking around here and I just asked a couple other traders. They're seeing nothing except the imbalance.
Okay.
So I don't see anything that's jumping out at me. Maybe it's something. Maybe KeyBank had some commentary. There could be an analyst note out there here that we're missing. Obviously, we're doing the show live, and sometimes we miss something. But I think this looks like an imbalance thing to me.
Hey,
622,000 shares significant.
All right, one more before we go to Sean here. Let's look at PDD. Pinduoduo. It is the biggest loser on my down filter this morning.
Yikes!
Getting cracked on their earnings report. The sales
Crack.
or the EPS was light. The sales was light. And so this is like a Chinese e-commerce play.
And Joel Griffin's saying you're right. There was a key bank note that came out this morning that was negative.
Okay.
I'm not right. Alan's right.
Alan, thank you. So we've got a couple other traders saying now there was a key bank note here this morning. So you got a key bank note and you have a huge silent balance. That's
yeah. And who is it here? I think Abner's boy. I think he's going. Someone's looking for a fade here. A pre-market fade fake out. Man, I just don't like that it's through yesterday's low like that. Pretty easy. So if you're looking for a bounce here, you definitely got to get above 37.37.
37. Forget about it. This one's not bouncing back. I don't think so.
I said, you don't think so? You don't even think it's going to see yesterday's
$31. No, this is small, thin, 5.4.
No, I'm sorry, Dennis. I'm sorry. I went back to AT&T. I'm sorry.
Oh, you're an AT&T.
Sorry.
I'm on PDD.
Sorry.
We moved on.
Sorry.
Okay. No, that's my bad. We got two stocks in the 30s, so that's where we got confused. It's like this not come back 37. I'm sorry, the hope trade here, 31.50. It's trade 5.4 million shares. This thing, price discovery is happening. $30 is going to be your support on PDD. You got some there. If it takes out 30, look out below. I'm scared to buy this stock down 22%. This one could be real ugly. It must have really been a disaster numbers. Did you give us numbers yet?
I mean, I gave him kind of their best.
Okay. I said the AT&T thing going on. So 20 cents lose. I'm just looking to. Yeah, it's a mess.
The thing different about this, all right, I see a couple lows at 30.02 and 20.95, but they're staggered. So it's not like, don't have the conviction like that urban where you have 4, 5, 6 lows in the same area. This is 2 spotty lows, one on September 27th, and the other was back on August 26th. So little different scenario here. And this is a Chinese stock, correct?
Right. It's a Chinese e-commerce play. And our guest in our bonus hour has some thoughts on that. So I'm going to wrap up our show now and transition to the bonus hour. I want to thank our guest today, Andrew Chanin. If you missed any part of our show, catch the podcast on any podcast platform or rewatch the show on youtube.com/Benzinga TV. Please remember, everything we say on the show meant to be used as informational purposes only, not for investing or trading advice. And on that note, let's bring on today's guest as I transition to our bonus hour. Sean Udall, CIO of Quantum Trading Strategies, has been joining us once a week for the past few weeks to just give us an hour or so of his time. And Sean, you have some comments on PDD. So tell us how you really feel here.
Well, first of all, good morning, Benzinga.
I love that, man. I love that. I'm going to have you on every Wednesday for eternity.
We like that.
There we go.
What's up, Sean? What's going on?
Hey, how you doing, Dennis?
Good. What's up? What do you got comments on this PDD?
Well, I don't regret a lot of trades I don't do because there's, and you guys probably, I purposely don't do trades. Like I look for reasons not to do a trade. This PDD, I've been looking at this thing short, I think pretty much since the spike last quarter. And I think it's a house of cards. I think it's a very low quality Chinese play. If you just kind of know how they do business, which is basically the gamification of selling cheap products to low income Chinese consumers. Whew. So it's the whole thing about somebody says, oh, hey, look what I just bought for this cheap thing. And they get a bunch of the people that are in their group to like see what a good deal it is. I mean, imagine if like Five Below or Dollar Tree or Dollar General started a website and like made a game out of seeing how many cheap dollar products they could sell in 30 minutes or something. That's kind of like the PDD model. And that's not the only thing they do, but that's a huge part of what they do. And again, relative to a name I like Baidu or JD I like less, but even Alibaba, I don't mind Alibaba. It's a very high quality Chinese company. I don't think it's dirt cheap like most of the Chinese stocks I'm looking at, but I would put PDD in in a pretty low quality category. There's also a very strong conviction short thesis out there. I'm trying to remember the hedge fund manager that even penned one and has uttered it on Bloomberg a couple times. Can't remember the guy's name, but I think he's right on. I think it's like this. There's been a lot of Chinese companies that have done fine, but there's also been, there's probably 25, 30, 40 of them that were like $50 Chinese stocks that are penny stocks today. So, and some of them don't even exist anymore. Some of them have also been bought out by other companies, but for big discounts. But yeah, I would think PDD doesn't have a super bright future.
Tell us how you really feel, Sean.
Yeah, there you go.
Sean, can you just adjust your mic a little bit? I think it's rubbing your collar, and we're getting a little bit of crackling.
Oh, sorry about that.
See, I was going to say something. I wasn't sure where the.
I think it's your mic just rubbing your collar, maybe.
Oh. Well, I put this collar shirt on for Joel.
Today.
That's what it is. It's the collar shirt.
Yeah. I should have stuck with my T-shirt because then I wouldn't have any mic interference.
T-shirt, Trader Circa. I got to go trade the open there, Sean, but I always like to stay on with you for a few minutes there just to say hi. So I always enjoy. One more question I just got for you. You talked me into the workday the other day, long term, because you were on 2 weeks ago. And you said if you have a really long time horizon, you can't really go wrong with a workday here. And I was like, you know what? I've been looking at this for a while. I stuck it in my retirement account, just a small piece. I put it in the retirement account with a 20-year time horizon. Are you still sticking with that thesis? Because
I'm
following you on this.
No, Workday and Splunk remain two of the higher quality, high growth companies. They're not dirt cheap, but they're not nearly as expensive as the crazy ones, and they've had pretty good. The Workday pullback. You tell me, what was the low one at? 149, 151. That's another one. I should have been there. I should have bought some. It's hard to make a perfect buy though, as you know, but it's probably 15, 20 bucks higher now. Yeah. I like it. It's still way off of highs, and it's, I don't know, what is it? 1/3 the price of something like what's Datadog or hey, we're using Zoom. Zoom's a great product. It's Zoom. Here's the one I'm going to say right now. If Zoom ever gets down to a respectably cheap price for a growth stock, it's probably one of the first stocks I'm going to buy. I don't even have a number yet where I'd be comfortable buying it, but I would put Zoom in the long-term camp too, but it's just still way too expensive. But product is just phenomenal. I've used a little bit before these things I'm doing with you guys, but it's just so easy. It just makes this stuff so easy to do. I can see why people have gone pretty gaga over the stock, frankly.
It's really good technology.
But yeah, Workday is very dominant. Workday is just feasting on sort of taking market share from Oracle, kind of year after year after year. I don't really see that changing much. I don't see an incumbent. Hey, if I see an incumbent coming up with a better product, better mousetrap than Workday, I'll probably be the first to say something about it.
Talk about Oracle. I have this in my long-term portfolio too. I've had this since the financial crisis. I'm in from $9, so it's a real long one. I'm still holding on to it. I've sold some of it. I've taken out like my initial investment, but I still got a pretty good chunk in Oracle. And I'm torn on this one because is this something that eventually starts to obviously maybe older technology maybe, or is this a company that is still one that you like? What are your thoughts on Oracle?
Yeah, I don't, for me, Oracle usually is a price point. So when it's, let's say they have their bad quarter that they have one out of every 4 to 6 quarters. They deliver most of the time, but they're like Cisco. Like once a year, they kind of miss a quarter. And, if the stock's down 20 or 30% off of a high or more, like where you bought it was a crazy great price. But yeah,
financial crisis.
It has a lot of value. They're still going to buy companies out. I don't hate it, but like I say, Workday, Splunk, ServiceNow, there are a lot of companies that have done a lot better than Oracle. So it's not a stock I'm probably going to own, unless it gets cheap. Put it this way, it probably has less risk in the market. So here's one thing I like. I used to own Microsoft years ago for this purpose. Like every time the market would take a huge hit, I could basically use Microsoft as a source of cash. So I could buy growth stocks down 40% and Microsoft might be down 5%. Oracle probably sets it. Like I'd swap it during a big sell-off, right? So, hey, let's say there's a market correction and Zoom's down 40% off the high, and you're sitting there with Oracle maybe down 7% off a high, well, that might be a good swap. So I think it'd be a good source of funds. I don't hate it. I think it's a good long-term holding. They probably do as well as the market does with less risk. So, but you start getting up 3-4 year highs, which they're probably close to now. Just like, Cisco was a really good sell like a quarter or two ago. Cisco had made a big move off lows. So to me, it's kind of one of those, if you can buy it like cheap and you can sell it dear, that's probably a good way to play it.
Sean, we're still getting some feedback on your mic. I don't know if you can maybe switch it out or try to unplug it, plug it back in. That seems to that's the Joel trick right there. It seems to always work. Just unplug it and plug it back in. Not sure.
Where is it at? Where is it on your shirt? Let's see here. He's trying to.
Well, in the meantime, while Sean adjusts his mic, Joel, can you give us some level?
Yeah. Oh, I did.
Some of the names we just talked about. Like we're talking Oracle.
Okay. Yeah. Workday here. Workday. I'll tell you right now, this one looks really interesting here. You're just bumping up against a roof here. Gap down was probably from earnings. Your gap down high was 168.02. You took a couple pokes at it, 167.66. Took another poke yesterday at 167.55. So this one, boom, you clear 168. Market laying on a little bit today. But it's up 11 cents. But I keep a real close eye on 168 for Workday. Oracle bounce back. 57 is my number in Oracle. Kind of been sleepy here. It looks like someone really wants out at 57. You hit that a few weeks ago. You hit it back in early October. You saw that level again back. You quite missed it there. So 57 is my level here in Oracle. So we'll take a look at that. I wanted to ask Sean, the first thing when you mentioned the PDD, the first thing I thought about was Baidu. Because I know you've been pounding on that, the stock, pounding the table on that stock for quite some time here. So you put them in a totally different category than PDD.
Oh yeah, to me, it's not even the same. PDD kind of became a chase trade on a couple good quarters. Again, relatively low quality type, just everything. Baidu is one of those kind of these crazy stocks. I'm trying to think of a good example. Apple 2013, everybody thought they were losing market share. Well, they were losing some market share to Android and Google, but everybody kind of thought it was over. Netflix around that same time period. Where was Carl Icahn buying Netflix? Honestly, I kind of think Baidu lines up like one of those really, you don't get a chance to buy really high quality companies really, really beaten up very often. It's maybe once every 5 years. So that's kind of how I view Baidu. It's kind of just a crazy thing, but it's been a perfect storm to the downside. Chinese economy hasn't been as good. The trade war stuff we're doing has definitely hurt them. There's no doubt about it. Baidu is also going through a little bit of a transition, which Google had to go through a few years ago, where Google was transitioning from a very heavy desktop revenue model and transitioning to mobile monetization. And Baidu's been going through that. Pretty much the last year, that's been what they're doing. They're transitioning, they're de-emphasizing desktop, starting to re-emphasize mobile. You could argue they could have done it earlier, but the way the Chinese market was, they didn't have to do it till now. So, there's a lot of internal metrics at Baidu which are really, really good. Their AI growth is tremendous. They have a device that's basically like Alexa that has just crazy, crazy growth. And then they're not really trying to monetize much of that yet. Just like Google didn't try to overly monetize mobile revenue years ago. They kind of eased into it. They let the base grow tremendously. Then they monetized it later. I think that's the same thing Baidu is going to do. I think there's not a ton of Chinese stocks I really like, and this is definitely one of them.
Hey, Sean, could you just unplug that mic and try it again, because we're still getting some feedback.
Or even potentially, Sean, if you could maybe leave the Zoom and then come back, I think that might do the trick.
Okay, I'll just rejoin.
Yeah. Okay.
Okay.
Sorry about that.
Nope.
That's okay. That's okay. I just wanted to take a look here at a couple issues that we did talk about during the show, some relevant levels. Target tried to rally once again. You're still up 1090 at 121.70. You made a run at that high, but we were turned back on 122.78. So sellers are coming down here. In target, I would be using that upper 122 handle now as a target, as opposed as that pre-market high 23.67. Canopy Growth really doing battle here. Up 93 cents. I keep seeing it sneaking down under 16, and then someone keeps popping it back up. So big battle on here, 1590 to 1630. That's what you got going on here. In Canopy Growth, don't look now. I is over $7 here. Shorts on the run. We are in the 7 handle, 720, trading at the highs of the pre-market session. Pretty good volume here. I mentioned the level to clear in that one was yesterday's high 690. We cleared that, so we were above that. I don't know if you could quite use that as support, but look out. Well, got another target. We'll give you 803. 803. That was your close. Believe it or not, on Monday. So not much in the 7 handled here to lean on in Telestat. Urban coming back down to that area. If you want a chance, you might get a look here to buy it at 24. It's coming down. It's not coming down with quite the velocity that it did before. So it looks like you do got some bidders out there at that area. 24. We'll see what happens in Urban Outfitters. We talked about a potential fade in Lowe's, and it's doing okay. It popped up. Sellers have stepped down from that pre-market high at 120.67 to 119. So 119 is the number, a buck away from that. So Lowe's starting to look a little tired here. AT&T is on its heels. Moffett-Nathanson got things going yesterday. That news out this morning, now at $37. Selling balance of 600,000 shares. I'm not sure if that's changed yet. Pre-market low at 36.91. Through all the support here, had a lot of lows here at 37. So I was hoping maybe to get a pop up to yesterday's low. That'd be a gap fill at 37 on the daily charts for AT&T. Seen a daily low at 36.71, but got a lot of momentum here going to the downside in AT&T. Let's check Verizon. Verizon still hanging out. Oh, wow. Pairs traders getting run over here in Verizon, AT&T. Verizon trading in the green by 6 cents while AT&T is getting slaughtered. I've tried to trade these stocks. They'll go together, but today's definitely not a time. If you're looking at resistance here in Verizon.
We have Sean back, I think, Joel. Sean, you here?
Testing 1, 2.
Hey, much better.
I'm telling you, it's the collared shirt. The collared shirt's messed up my mind.
I stand corrected.
Got to stick with the t-shirts.
You got to stick with the T. Well, Sean, we were on. Did you catch any of the show yesterday, or in New York? I had a suit on.
Oh my God! If
yes.
you'd have told me you had a suit on, I think I would have watched it just to see you in the suit.
And we got a comment from someone that we were finally professionals, and that and that we were, it was a good addition to the show. But I think we still give the same kind of commentary, no matter what we're wearing.
I think that's a little.
Dennis picked up another T-shirt for Traders for a Cause, or that's the same one from New York or not. But we got to get him some more T-shirts.
No, so I know. I'm pretty sure it's because the mic was down around my neck, and the golf shirt. Yeah, the golf shirt was rubbing on it. So
okay, so you ready for a few tough stocks here?
Yeah, we can talk about whatever you want as always.
KRTX.
Oh, well, I do have a little interesting intel on this. So there's so KRTX, I mean, I don't even know the company. So here's what I found out yesterday, and I even posted this to public Twitter. I didn't try to hoard this for my for my subs, if you will. But there's a company called Pure Tech Health OTC bulletin board. I mean, I almost never trade these things, but it's PTC PTCHF, I believe.
Oh, boy.
So here's the funny thing. They own 7.3 million shares. So I mean, I found this in 3 minutes yesterday. I mean, this is the kind of stuff that's funny. You know, there's a lot of these so-called biotech experts, and I didn't see one of them mention this stock. So I guess my view is if you're gonna try to play that KRTX, I mean, this is the way I'd do it. You're basically getting the KRTX for free. Obviously, now what happens if KRTX drops in half? Well, the value of this thing could drop a lot too, obviously, right? But they own 7.3 million shares. That basically represents the entire market cap of this entity at this point. I don't know much about this entity. My assumption is it's a vehicle that buys biotech companies. This is 3 minutes of research yesterday, but the market cap of this little PTCHF is the same as, you know, their ownership in KRTX. So, you know, there was also, I mean, these guys are listed as a patent owner. So if you just leave and look at the Yahoo Finance description on KRTX, this Pure Tech Health is listed as a patent. I think they own somewhere between 30 and 35% of the patents of KRTX.
Very interesting.
So, yeah. So this is something, if somebody wants to play, I'm not going to do much on this. I might be in a few, like I would consider a few shares of this like a few leaps, right? So, hey, there's plenty of times I'll buy a leap for $3 or $4 or $5 with 6 months or 9 months or a year to expiry. Yeah, this is kind of like buying a leap with an unknown expiry. The expiry lasts as long as the company's operational, right? But the you know, as far as KRTX, honestly don't know. I will say this: Alzheimer. I believe they're targeting schizophrenia and Alzheimer's.
Yes, correct.
Okay, I had one of my biotech guys that I used to want him to do research for me. He has kind of been somewhat unreliable. Sometimes he finds some pretty good stuff, but I said the next big thing that he needed to research was Alzheimer's related companies. So it is possible that we might have to start paying, like this might be a tell, like maybe don't worry about the stock, because what are you going to do? You're going to buy it up 6-bagger, right? I mean, here's the well, yeah, isn't a 6-bagger off of what it was?
You're talking before? KRTX?
Yes. But here's the interesting thing. I mean, had I known this company, you could have bought it between, I think, 30 and 40 for an hour or so. So, you know, you have to really know the space. Honestly, this is the problem with biotech. The stocks just don't trade rationally. So when there's no news, they trade irrationally low. And then when you get good news, they trade irrationally like this. It's kind of an area full of a lot of gambler traders too. It's a tough space. I purposely just don't trade biotech the one name I really wish I would have bought some is Biogen.
I was just going to ask you about that.
Yeah, that was and they're really strong in the space. So like that, you know, when you get a great one, or like when Celgene, what was Celgene at before they got bought out? Could you buy that at $75, $80, something like that?
I think it was lower.
God, I mean, so now you might have had to wait, 8 months, a year to get paid for it, but they ended up getting bought out, and so there ended up being a huge opportunity for the buyers of that. So yeah,
could you do some quick technicals on KRTX? Let's do this. We'll do the
you want me to do a screen share on it?
Yeah, you do a screen share here.
I don't even know if we can do technicals on here. I'll here. Let me. Well,
I'll tell you, we don't need to share my screen, because when I see moves like this, there's only two things I keep an eye on. One, 123.99. That was the close. So everyone that thought it was going to 200 today, and wherever they bought it yesterday, they're marked at 123.99.
There you go.
So you come up to 123.99, at least the first time, if and when you come up there. I mean, that will be an area of interest just based on it being the mark. That's it. After 15 million shares traded on Monday, 5.5 million traded yesterday. That's where they decide to end. Now, I also look at this one, not interested in shorting it, not interested in buying it. The next technical formation I'm looking for is some kind of consolidation, some kind of inside days, two lows or two highs in the same area. And I don't know, maybe I'm going out on a limb here. Maybe you'll get an inside day today.
Yeah, no, so I was just gonna say I did a screen share. I don't know if it's showing or not. The only technical I could see is, okay, well, first of all, I would almost believe you have to have some view of what their technology is worth to trade this in the first place. But I mean, hey, the easy technical, if you get a gap fill under 31, that would be pretty attractive. My guess, but really, I guess you just have to look at these two candles and see how. I mean, you know what you could do? You could basically put some Fibonacci's on this, and you could say, okay. And I wouldn't use 150. I would use 120. I would use the high candle, right, 124, and I would put the Fibonacci there and just say, what percent retracement are you willing to kind of buy? And then you get basically, it would have to use a stop on it, right? I mean, I'm not a huge purveyor of stops, but on short-term trades or large speculative trades, I definitely use them. So here's if you don't mind me bouncing, here's a stock I've done very well with over time. They're not they don't have a drug in exactly the same field, but they're in Parkinson's, schizophrenia. Their drug, I believe, is it treats a form of Parkinson's when people start having delusions or something. This ACAD's done very well. It's had some fits and starts. So there's the weekly chart on it. But it's an approved drug. It's growing sales. They have a good pipeline, and they're in this space. Another one is Adamas is in this space. Adamas has been wrecked. Again, this is kind of one of these things we're seeing in biotechs now, and we can talk about this further if you want, sort of what I call the algo effect on biotechs. But if you look at Adamas here, let's go to a 5-year. So God, even, I mean, look, I mean, so pre-approval, this was a $40 stock. Post-approval, it's a $5 stock. I don't know. There might be opportunity here. And again, they have a pipeline in basically treating mental illness. Obviously, Biogen we talked about is in the fit. There's another one of these. I can't recall it off the top of my head right now.
So you said you were talking about a Fibonacci from like using the closes.
Yeah. Well, if you were to go back to KRTX, this is just how I would do it. I would put a Fibonacci on the high candle yesterday, not the spike high, but the high part of the body of the candle. So it's basically 124.
Gotcha. Okay.
I'd put a Fibonacci. I'd go all the way down to basically, you could put it either at 30, like with the bottom of the two candles, or you could put it before the pop. It almost doesn't matter. But yeah, I basically put a Fibonacci between like 30 and 120, and like, okay, well, how much of a retracement do you want, right? Do you want to try to buy a 38.2? Do you want to try to buy a 50? I mean, hey, on a 68% or a 75% retracement, yeah, some might be worthy of a shot. Like, this is just something I'm not going to touch.
You can't control your risk in something like this.
There you go. You can't control. I mean, what if there's just an intraday halt? Like, what if you have a stop and you think, oh, I'm okay because I got a stop? Well, what if the thing is halted and then it opens down 40%? The stop doesn't do you any good. So yeah, you can't. These kind of things are just like the Wild West. And hey, I don't mind the Wild West, but this is not the kind of the Wild West gunfight I want to be in.
Just want to answer a quick question here for Admir's boy. He's asking what Fibonacci numbers are. And basically, it's a technical analysis tool, mathematical Fibonacci's. It's retracements. And you're figuring there's actually the point, what is it, 0.618 and 0.3816 or something like that.
Yeah.
I've never been a huge fan of I've been a 50% guy, and it's not really figured in the Fibonacci sequence, but it's purely a mathematical number that's derived from moves. And it's you could throw the 50% retracement in there. It just depends on your level of technician. There's some people that swear by fib numbers. and base all of their technical analysis on it. We mentioned the 50% on the show. I don't know if we're just old fashioned or not, but
that's the one I think is I probably use the most. If you get a 50% retracement, that's generally where I'm like, look, this is 50% retracement. I can take a shot here. Still might not work, right? But I can take a shot at a 50% retracement.
And it's a hell of a lot easier to figure than the 0.618 and and the, what is it, 0.382 or something like that. It's much easier from a, if you're trading and from a net, mental standpoint to figure. Opening bell here, folks, here in the S&P 500 index futures. We sold off overnight. 31,050 is your pre-market low. Buy the dippers have taken us 10 points off that pre-market low. We cleared mid-range on the session here, so a little turn here in momentum to the upside. We're above yesterday's low. I like to see what happens here at yesterday's close. That would be 1850. You didn't even see that in the pre-market trading, so potential sell zone here. If we can get up 1675, your pre-market high, your closing price of 1850 is your first area of resistance. Important that if you're looking for just the momentum and for the buy of the dip, say, hey, we're just going down, 3150 today. You better get out there and take out that pre-market high. It's 1675. Before we go back to analysis of some other issues, Sean, just like to ask you about overall market here. Back and forth. I know that we've been talking off the grid here, and kind of hard to try and pick a top in the market, even though we like to do quite often. What are you seeing here? What are you seeing overall in the market as far as we'll go the futures or any individual stocks here? Are we looking right? Well, like, what about a Santa Claus rally now? Like, how the hell are we going to have a hell of a Santa Claus rally from here?
Well, there's a lot of it's like point counterpoint in the market. I mean, I have not been. You've known me to be very bearish at certain points.
At times, yep.
Yeah, and I still think the biases to the upside. We do have a big bugaboo out there, which is to use a technical term, which is December 15th tariffs. Everybody's talking about them. It's very hard to game. It's
possible.
Hey, it's literally a coin toss. However, when we get bad trade news on China, it doesn't seem to have a long shelf life. It can be pretty brutal for 3, 4, 5 days, but it doesn't really have a
You
long
mean 3
shelf
or 4
life.
or 5 minutes, Sean?
Sometimes. Yeah. But we have had, the early June sell-off was pretty big. There was a pretty good sell-off in August. We've had some kind of 5 to 10%ers. But yeah, I think the bias is higher, and I can't even really put a finger on exactly why. But if I had to kind of look at one, I think it still is, a lot of it has to do with sentiment, aside from put call ratios. So put call ratios are incredibly, like, there's no fear in them. But aside from that, sentiment is just not that high. Now you say, well, wait, how is sentiment not high when, I'm looking at it like the S&P, the RSI and the S&P 70? Well, that's a technical indicator. It's not really sentiment. So this S&P short term is overbought, but it almost feels like to me is that it seems weird to say this, but it almost seems to me that big money is pseudo underinvested. I know for a fact they're underinvested in value stocks. I know that for a fact. And I don't even know if they're that over invested in growth stocks anymore, because there's been 2 growth stock scares this year already, and we had a big one late last year. So I don't know. It just kind of feels like we have feels like we need a little bit of a pause and a sell-off for a refresh. But I kind of think S&P is probably going to march to like somewhere between 32 and 3,400 before we really get into trouble.
Very, very little resistance here. So let's throw another tough one at you.
Yeah, well, it's not tough for me because this is a name I've never really liked. So you could say, well, wait, why weren't you short? I'm pretty. I got to really have a thesis to short something Now, I could have shorted the first breakdown on this, but yeah, never really liked this name. I used to get a lot of questions about it when I was a contributor at Briefing. A lot of people are interested in this stock, kind of in that you can see it, basically anywhere from kind of 20 to 30 bucks. There was a lot of interest. I always said, look, I favor all my 5G stocks more. And I don't have a 5G name that looks like this at all. So, Qualcomm's done way better. MTSI's done
Correct.
way better. CommScope is up 50% off of lows. So I just don't know. There is a one cheap stock I like now. I don't love it because I can't take a big position, but I like it, and it's been wrecked. But that's CASA. But again, I'm kind of just nipping away at this. This is basically in my January effect list. So later in the year, I'll probably get more active on it. But yeah, I just, like I say, I never really liked that eye. So honestly, I haven't done a ton of I do remember, it's a spectrum play, and I have seen a lot of these spectrum plays be crazy. So I don't know, it might be a good buy here. I'm not going to touch it. It's just a name I'm probably not going to do anything with.
Okay. All right. Pot trying to get off the bat here. Bank America makes a big call here. Upgrading Bank America upgrading Canopy Growth to a buy, trading up a buck. Bounced around between 15.90 and 16.35 in the pre-market. You snuck your head above that up to 16.50. I'm still kind of
16.30 right now.
Yeah, I'm still looking at that like 4-day high at 1662 to show me that they really want to take this rally for good here. So it's showing strength. Closing your eyes and buying that opening print here at 1613 seems to be paying a little bit of dividends here, as your low was 15.98. Couple other stocks here. Just want a quick update here. Target is getting faded a little bit so far here, folks. Sellers came down in the pre-market 122 area. Designated market maker was able to open it up at 122.32. If you bought this off the open, you found out pretty quickly you were wrong. 22.44 and Kaplui. Here you are trading under $119. Target starting to give some back here as we speak. Talked about Urban too. Just if you're going to try and do some bottom fishing, wait for 24 or under 24. Buyers off the open took it to 25.10, but turning south here now, it sure looks like you're going to get a look at 24. Boy, I got some stocks people want to ask you about. How about, I'll just go with this. This is another tough one for Dion H. Boeing BA. Is it still in like the 330 to 380 trading range? Yes, it is. Comments on Boeing. Once again, it's hard to comment on these stocks technically when there's so, I don't know. I guess the news is slowing down a little bit in this, but how can you really give technicals in this when one headline
can we look at CGC for 2 seconds before
sure,
we go
I'm
to
sorry.
No,
there we go.
No, nothing about so to me, there's no resistance until 1850.19.
Yep.
So to me, there's a trade here to basically 1850 to 19 bucks. Now it's got to prove itself because that's natural resistance. Now it could also go to 21, but you basically get 1850 to 21. I wouldn't be surprised if it bounces at that point. Okay, Boeing. Boeing. It's has this stock really traded technically? It's a darling. In my view, Boeing needed a reset. So it's kind of reset on time, but not price. It hasn't done anything for about 2 years now. So it's reset on time, not really price. Aside from the crazy spike high, it hasn't really sold off that much. It's amazing to me, with all the negativity, this stock has held as well as it has. Again, which kind of tells me that maybe it's not going to go a lot lower, right? And because at some point they're going to be close to the end of this Boeing Max issue, and then they're going to start shipping those planes. The planes are going to be flying again. Here's another thing I'm just going to say on this. How come Boeing never gets up and says something like, "Hey, it's terrible. This plane crashed. It's terrible. People died, but on a per mile basis, driving is, I don't even know how many magnitudes less safe than flying is." So And sometimes I'd almost like to see a company kind of stand up and defend itself and defend the industry a little bit. I think way too much has been made personally over the plane.
They did do some testifying.
Yeah, and it was also like, oh, poor me. Oh, it's terrible. I mean, I don't know. Look, you can't have a perfect product. There's no such thing as a plane that will never crash. So I don't know. To me, the thing has been blown out of proportion. At the same time, the stock was incredibly loved and incredibly expensive, and honestly, really hasn't dropped that much. So I think we're going to get to the point where the Boeing, what do you want to call it? Just the news, I guess, is closer to done than new. So I don't know. It's the same thing though. Like, is Boeing the best thing you can find to buy? So that's how I would kind of look. Like, I'm not interested in owning Boeing at this point. So I'm just looking at other things. So not to belittle anybody who's long the stock, or if there are people, I used to have clients in Boeing, but they owned it down $50. If they kept it from 50, they're heroes, right? So there's a ton of things, it depends on time frame and all that kind of stuff. But, I don't know. I wouldn't buy Boeing here. I don't think it's short it though.
Yeah, it's tough. It's a headline stock here. Are you doing any bottom fishing in Expedia, EXPE?
I'm not. We talked a little. If I were to bottom fish, I think TripAdvisor would be the name I would bottom fish. That's TRIP. But I don't know. Same thing. I just don't really. If I want to buy kind of internet-based properties, I can buy Twitter, I can buy Pinterest, and other things. So I don't. But Trip would be the one. That thing does line up really, really well on valuation metrics. It's one of the cheaper stocks kind of in the internet space in my matrix that I produce. So, but I just, again, there's just other stocks I like better, but it's getting to the point where I just don't know, sometimes a stock like this is good to own, not so much from upside, but how much more downside do you have if the market were to do something, right? Like something nasty. And so, sometimes you buy a stock that's this bombed out. I mean, Trip, maybe it used to be here. Let me look at a 5-year. Yeah, it used to be $100 stock. It's 28 now. I mean, if the market were to go down 10%, Trip might be one of these companies that actually holds flat or goes up. You know what I mean?
Yep.
So anyway,
better stuff to buy. How about Wayfair?
I actually don't do work on Wayfair.
Okay,
so,
good.
Yeah.
Pass. How about Uber?
I like Lyft a fair amount.
A couple of people have said that. I think the only one on the show that likes Uber is Nick Shaheen. I think that's the only person who's ever come on the show that's talked.
I mean, if I were to trade it here, there's no way I'd be short and I would be long. But I would rather be long Lyft than Uber. I mean, now Lyft is a nice technical chart. Uber's a younger chart. You got a big lockup coming. It's kind of been preloaded to the downside for the lockup already, which is good. It's good for the longs. You got a big revenue base. I mean, they're obviously now working on a path to profitability. I mean, I don't think the company's going away. I think Uber and Lyft are going to be around for a long time. But of the two, based on the work I do, I would be long Lyft, and I am long Lyft personally. So, okay. But I like this sort of consolidation bottoming pattern on Lyft.
Yep. I see what you're saying.
Yeah. I mean, it almost looks like it almost has to go to like 48. I actually think I think we're going to get a trade to like the low 50s on it. And that's probably where I exit Lyft.
Okay. Boy, oh boy, we're getting a lot of tickers coming here. I just want to comment here. I don't know if Abner's boy is still around, but he was going to fade that AT&T, that open, that 600,000 share selling balance. Got scooped up, 37.09 open, 37.06 low. You have cleared yesterday's low, man. Unchanged here, and you'd have to think about this one from the short side. I don't think we're going to get that. Urban, boy, this thing's all over the place. 24 bid stacked at 24, sold off to that level. Now
nice little bouncer.
Yeah, nice little bounce there in the 25 handle. Cron did sneak over 17.15 current high. Daily swinger Luckin Kitchen, LK, the Chinese Starbucks here. Nice couple days yesterday, starting to fade a
Wow.
little bit. Wow. What do you think about the Chinese coffee company?
Well, I would probably be more interested in a Luckin than a lot of
Starbucks.
Chinese companies. A lot.
Okay.
Well, yeah, maybe Starbucks too. I mean, Starbucks has benefited greatly from their positioning in China. So this is one. I do 80% of my work in the tech space. So there's just a lot of these companies I kind of just purposely don't do anything on.
Okay.
Luckin would be one of them, but I don't know. When the stock was cheaper, I kind of looked at it. I never did anything on it.
How about Nutanix, NTNX? I know you've been following that one for a
I
long
like
time.
it. I'm long. Beautiful inverse head and shoulders pattern here for the technical folks. I think it's broken it's confirmed a lot of downside trend line breaks. So again, I can value this very easily into the 45 to 55 area. So I like this. I'm probably going to be long it for a while, maybe another year or two. Yeah, I like the name. It's set up, and they kind of had their first good report. So I think the odds are pretty good. They're going to report well again. And this is one of those moving to a subscription model type plays. So it hurts short-term revenue, helps long-term revenue. I think that's ultimately going to benefit Nutanix. Reminds me of a lot of Data, which got bought out. But when Data was a $45 to a $55 stock, was kind of going through the same transition, ended up going to 120 on its own, gets bought out for $170. So,
Is this the move for real here in Square? You talk bullishly. Everyone talks bullishly on this stock, on this show. Man, long consolidation period. A lot of green candles in a row. Not sure if there's any news to accompany that, though. Man, you've bumped your head up in earnings at this level at 66.60. You just hit 66.95. Man, it's trying to get off the mat. I think it'd get really interesting over that gap over 70.81 here. Talked bullishly on Square here,
Yep.
moving up nicely.
I would not be short Square. I would not be short it. No.
Twilio.
So,
well, you finish. Give us a couple levels in Square, and then let's move on to Twilio.
I think assuming we don't get a short-term December 15th headache. I think before it looks to me like it's going to go test 71, and then at 71, does it start filling the gap right away? Does it grind? Does it spike? But it just looks like it's kind of on a here's one thing I do like about Square. I like a stock that acts like this post earnings. So you don't see a big earnings gap that's fading. It kind of was the same, it was basically traded around the same price, and now it's starting to grind higher. So to me, this looks like funds are starting to buy it again. That's usually a good place. So I like Square. I think I can get to $100 price on Square without too much effort.
Without exaggeration here, evaluation.
Yeah.
Interesting.
That's not
day.
in 6 weeks, by the way. That's in a year.
I know you're a long-term guy.
Yeah.
That's why we like to have you on. In this hour, I think Roku maybe got hit on a little insider selling yesterday. It's funny, these more volatile stocks, the highs look closer than they are. On Monday, you got the 165.10, packed off 17 points to yesterday's low. Inching back up here, really the only thing I can give you here, I can give you two bits of information. 165.10, that was a high of the move, and 2 on Monday when our flight was delayed. Dennis stopped at Best Buy and bought a Roku stick, and he said that he got the last one on the shelf here. So couple notes there on Roku. Any comments from you, Sean?
Well, I have shorted this very nicely a few times this year, and I'm kind of hoping it goes to 170 to 175 again. I mean, that's here's what. So this is kind of a theme. So what are people doing right now? They're taking tax losses on cheap stocks, and what are they doing? They're buying expensive stocks because they think they're easy. Oh, hey, you just buy this; it's going to run into the end of the year. Well, it may or it may not, but I'm sure hoping some of these do run a little bit more. So in other words, I've kind of got a list of what I call could be these year-end kind of flush money, runners. So people chasing the high price stocks into year end, thinking that the funds are going to chase them too. They may or they may not. But I think, this right now is only about $5 from a shortable level for me. That's the best thing I can say. And really, 170, 175 just sets up to me as and like, I would love it if this thing is 175 on December 27th. That's what that's my Christmas
that's your
wish.
dream, right?
Yep. Because I think I mint money on this thing in January, if that's the case. Anyway, go on.
No, I know one thing. Triple D is ability to like look both ways in stocks, and playing from the same stock, maybe long and short in the same day. Longer term perspective. I mean, whoever tracked like I know you've caught some shorts in here. Must be pretty good timing. I think if you would have caught it in September. And hold on to it. But like, do you ever track like where you covered your shorts, to maybe try a small long position?
This is one. I mean, I was bullish on this. I think I have some subscribers in this name. I was bullish on this December and January. I mean, I even posted a post of numerous times about this is kind of the one that got away this year because I had this lined up on the long side at 32. I think it went below 32, but I was very close to buying this at 32. Didn't pull the trigger, big mistake. But yeah, I mean, I'm looking right here. One of my best shorts was actually earlier this year off the 70 to 75 level. Doesn't seem like much on the chart now, but it dropped 20 points.
No. How about CRM? How about Salesforce?
Perennial kind of winner, hard to short it, getting kind of extended again.
New all-time high.
I'm more of a buyer of CRM into kind of big market corrections. That's kind of how I've historically played it.
Correct.
This is like one of these kind of no-touch names for me. It's high quality, but it's very expensive. So I don't know. I kind of opt for other things, but yeah, I can't argue with the success that the company's generated.
Actually, I stand corrected. We're not at an all-time high. That all-time high comes in at 167.56 from April. So
well, it's pretty close to it. You're not too far off.
Splitting hairs here.
Yeah, $2.
We're also just going back to the payment space here. PayPal. We're talking about.
PayPal was my stock of the year. Was that 2 years ago? From $40 to 100. I'd buy it here. It's the same thing. I almost want to see how they act next report. It gave a nice little short term earning. Like if you bought it on the earnings weakness, you could have picked it up. 95 to 100. It's not up a lot. That's a good 2-week trade. This is one stock that I think will get back to all-time highs. Like, some stocks you kind of wonder, but this is one stock I firmly believe will get back to all-time highs and make new higher all-time highs. So very high quality stock, not that expensive, kind of a plotter, but sometimes plotters are sexy. I mean, look at Visa, what Visa's done over time. So very, very high quality company and really not that expensive even at current prices. I just don't own it now. It's kind of on my buy list for people who like kind of like stodgier, safer stocks.
Talking about stodgier, safer stocks, how about Costco?
Yeah, it's another one. I mean, this one I would be less ebullient about. I think like Costco's kind of, this is an overused expression, but to say that the easy money has been made on Costco, I think is an understatement. Sometimes these store growth deals just run out of room. I mean, the Costco is just not going to build a lot more stores.
What about China? No, what about China?
Well, I guess that could.
Yeah, did you hear what happened? Like they had to people running over each other in the parking lot, and they had to close it early because they ran out of stuff. So I don't know if I don't know if I'd poo-poo it on that. I don't know. I haven't done enough research on it to say that. I know this was a favorite of yours a long time ago. I'm not sure.
I loved it. Yeah.
Twilio. I mean, what about Twilio?
Sometimes you look at a stock and you wish you just never sold it. But Costco's one of those. Twilio, kind of the same. I don't think I'd short it here. The chart actually looks good. This looks like a very good chart. People forget they didn't have a great quarter. So the one thing I've learned to respect in these, when you get kind of the first miss, it wasn't a bad miss, but when you get the first miss, Joel, and you know this as well, if not better than me, a lot of times that next quarter, man, if it's the same kind of a quarter, you actually get a bigger drop the second quarter. So even though some people might think, well, this thing went from 130 to 90, that's a pretty big drop. Hey, if they miss again, this thing's percentage-wise probably going to drop more. So this kind of sets up, could be a little bit scary. There's also some news recently that one of their largest customers is using less of them. I believe it's the WhatsApp division of Facebook is de-emphasizing the use of Twilio. So I don't know. We'll just have to see. Like, this is one, everybody's buying it because I think they're saying, oh, hey, it was 150, now it's 90, therefore it must be cheap. That's not the school that I come from. Sometimes really, really expensive stocks are still expensive, even 30% lower. So I mean, hey, if you like something like this, you should love a Pinterest, or you should love, you should love a Spotify. So there's companies with similar growth rates that trade at like 70% discount to Twilio. So those are the names I tend to favor. The chart does look good, but this one I think is an easier sell on bad news too. Like, it almost just kind of seems like it's going to run a little bit, and then the kind of the momentum buyers are going to get algoed out of this one again. That's kind of feeling I have. I'm kind of leaning to buying some puts on this, to be honest. I've been thinking about it the last day or two. It's funny you mentioned it today.
KRTX, just real quick. You did get through that closing price. Nice range here. You did get to 128.39. Your low of 116, hanging out at 122. So 123.99. If you did exit there, you were regretting it for about 5 points, but done now. And this thing is trading in bucks, man, at half a bucks. Holy macro, man. Look out, Loretta. This thing is not for the faint of heart here. All right, we just got a couple minutes left here in the extended hour. Went up and matched that pre-market high right on the kisser. 1675 is where they had it as a high last night. Took it down to 0450, and they bring it all the way back up and match the pre-market high. So shaping up here to be a significant level in the session moving forward. We did get a question here. I'm trying to get all these in here, but they're fast and furious. How about work?
I like work a lot. In fact, I bought more work yesterday. The shares I bought yesterday.
Is it based on technicals, fundamentals?
Well, it was making a decent little climb out of the low. I think sometimes stocks just kind of get misunderstood. So it sold off yesterday on Microsoft news. So Microsoft has a product, I think they call it Team. There's a company called with the ticker symbol Team, but they call it Team. And they're going rah-rah because they got 20 million users and blah, blah, blah. Well, it's a free product. And I think, doesn't Microsoft have 2 or 3 billion users globally? So if I'm Microsoft, I don't know if I'd really be bragging about having 20 million users on a free product where I've got an installed base of 3 billion or 2 billion users. Like, I guess I would say, okay, why don't they have 500 million users if it's free and it's great? So I think people who are selling off work slack because of these metrics that keep coming out on Team, I think they're using the wrong information. I actually think Slack sets up pretty good. I think the bar, I even call this a low bar setup. And I think the bar for earnings for Slack are significantly reduced. They were pretty high, first quarter out of the gate for them last quarter. They were pretty high. I think they had a very fine quarter, but they just didn't crush numbers. Zoom has crushed numbers, right? CrowdStrike has crushed numbers. So they didn't crush numbers, so they got punished. Now, I don't think it's going to take that big of a beat for the stock to work. No pun intended.
Okay. All right, here. Let's see if we can sneak one more in here for Zach 157. Facebook, FB.
Yeah, same thing. There's just other assets I think that are set up way better. That I think we have an issue. People still want to buy FANG. especially Facebook, Google, Amazon. And I'm just, to me, it's clear as a bell that the government intrusion slash anti-monopoly, maybe intrusion is not really the right word, because the DOJ should be making sure that the biggest companies don't dominate to the extent that they crush competition. I mean, here we were just talking about Microsoft. Hey, should they be bundling a product that's a free product? By the way, this all sound familiar. That hurts new entrants into the space. That's anti-competitive. Nobody's mentioning Microsoft in that realm yet. That's exactly what they did with Internet Explorer back in the day. That's why they had a DOJ case against them and they lost. And that opened up, conceivably, the internet to a lot of competition. Google came out of that environment, right? So I would be very careful feeling safe in names like Facebook and Amazon and Google and Microsoft right now. I think there's more risk in those names than most people think.
All right, 10 o'clock here. That hour flies here. Covered a lot of stocks.
Flies.
Yeah, that was great, Sean. S&P.
And sorry about the mic issue.
That's okay. No, we got it. Good old the shirt and the plug. So we got it. No, we got it squared away. So everything's good here. I'm looking at the S&P, still down 3 1/4. Match that pre-market high, but sure feels like it's going to try and get back up there. 1850 was your closing price. So I'm not sure. I think the all-time closing high is a little bit above that. Yeah, your all-time closing high, that was made on Monday at 31.2175. There's your next target. All-time high, that was made on Tuesday in the after hours and pre-market session at 31.3250. So thanks for everyone for sticking around here on this Wednesday. We got to cover a lot of stocks, and we'll be doing it again next week. Sean, thank you very much for your input, and we'll catch you next week.
Have a good day.
All right, thank you.